Just more than about 45 minutes until that closing bell, and then we're off tomorrow for Thanksgiving, but we got to get you to that point, right? Take a look at where we stand here. Technology is actually a little bit green on the screen. You're only less than 2% from some of these record highs, and this was a number that was read earlier today, so really starting to get a lift as bond yields start to come down, and if VIX also comes down. This was almost a 20 handle this morning, so more calmness as well within the equity markets. This is very interesting. Take a look at the 2-10 spread. We had gotten up to 105 a few days ago. We're now back below 100. It was Priya Mishra at TD Securities really highlighting that this is a very flat curve for, sort of where we are in terms of this economic cycle. And it is dollar strength that catches our attention when you think about some of the strengths that we've had earlier, going back to mid-2020, and then after the Fed meeting minutes, looking at some of the biggest dollar strength that we've had now since about 2017. The pressure that this puts on the EM currencies, we're going to be following up on that a little bit later. But in the meantime, it is time for Options Insight. 40 minutes, that closing bell, have to get you up to speed with the day's options trading. And Abigail, you're really looking at these two themes, right? Sort of big tech and then the volatility that you've seen a little bit of calmness of.
Indeed, Taylor. It's really been an interesting week in this regard as we've seen rates rise and the expectation that the Fed could normalize policy, and seeing that 10-year yield over the last 10 trading sessions back up by about 20 basis points or so. We've seen big tech under pressure. Not so much right now, seeing a little bit of that calm that you were just talking about. True, too, for the NASDAQ 100 VIX, or that VIX, and it's down just slightly, but still at 24, so elevated. Let's bring in Alan Nuckman of Bullseye Option. Great to have you with us, as always, Alan. And what do you make of this? We've seen some of this choppy intraday volatility in recent days, and it seems as though folks are a little bit nervous about the Fed doing what many think they should do and normalize policy.
Well, I've been saying for years, tech is not dead. And each and every time it sells off, it bounces back. It's bounced back. The distance of that drop on that old top in the September-October scenario, so 17,000 is the near-term target. And we almost got there. That's happened every single time in history. And if you look at the VIXen, VIXen's been trading between 20 and 40 now for 2 years, made some recent lows. Whereas the VIX, the S&P, the broader market, has not made new lows in the VIX, even though the S&P continues to make new highs. So you see some profit taking and some pullbacks, but there are still plenty of stocks in the tech sector that are significantly off their highs, and they have a lot of catching up to do to chase the index itself.
So this week and more recently over the last, say, 5 to 10 days, if we take a look in the Bloomberg terminal at the 10-year yield simply rising and we have the NASDAQ 100 falling, do you think that this situation will be ameliorated? Because when I take a look at the longer-term chart of the NASDAQ 100, it appears possible, maybe even likely, that it could do some healthy consolidation down to the 50-day moving average. Do you see that happening or no?
Well, at some point it could do that. Anything can happen in the marketplace, but the trends are still strong. Obviously, we had an exceptional earnings season, but if you look at tech and you look at the period of rising rates, there's been 6 periods of rising rates since 1988. Each and every time the stock market has been holding and so forth, but the average annual gain for growth stocks was 10%. And the average gain for value stocks was 6%. So growth stocks, tech stocks outpace the market even in an increasing rate environment. Let's remember, rates are at zero. Yeah, they have to go up, just like oil was at zero last year. So there's really not inflation, it's reflation. You can't use 2020 as the baseline and say there's inflation. And I know people, see prices higher than they were last year. Last was an aberration. We had extremely cheap goods and services.
Yes, indeed. And that's an interesting point that you're making there for sure. Well, one growth stock under pressure, certainly over the last year, Pinterest down about 50% from its February high. You like it here, though, from an options perspective.
Yeah, from an options play, I love the risk reward. I love the fact that it's consolidated here between 45 and 50 roughly for the last month or so. It's making a base, and it's got bullish divergence, meaning it's made new lows but not new highs in volatility. That's typically when shorts get exhausted. So what I'm looking at is a February 40 call. It's trading about 5 or so right now. It's in the money. It's got a good delta, so act like the stock on the upside. But what we can see here is this stock traded between 10 and 90 over its lifetime, so that 50 levels is kind of a magnet. And there's also some gap up above between 50 and 57. So a lot of things could get the ball rolling and get these shorts to cover and get some value in this stock that it's down 30% in 2021 versus the NASDAQ up 30%. So I like the value at these levels.
Always love your optimism. Alan Nuckman of Bullseye Options, thanks for joining us for Options Insight today, and happy Thanksgiving to you. Taylor, back to you.
Really appreciate that. As always, Abigail Doolittle. There are some other stories, of course, you guys, that we're following at this hour. We're going to